Hello everyone. So in this session, we are analyzing one of the India's most iconic automotive companies, that is Tata Motors, and which has been facing significant challenges in the recent months. The stock is already down by 32% from its 52-week high. From the high, it's almost 32% down, which is almost one by third down. So it's a very critical situation, and the bearish sentiments seem to dominate the market also. And bearish sentiment has already dominated Tata Motors, and over the last 3 months, the stock has lost around 25% of its value. So if you simply consider the last 3 months alone, almost 25% dip was there, and that is making it biggest drop since the COVID-19 pandemic. Just before, when I discussed about Nifty also, I told you this is the biggest dip in Nifty also after COVID-19 pandemic. But when it comes to Tata Motors, it's almost 33%, one by third down from the high. So, but why? The question is, why is Tata Motors under pressure? What are the factors behind this sharp decline? And most importantly, is there a hope for a rebound? Is there a chance that a new investor can jump in now? Let's explore the broader context. We'll dive into the reasons and we'll try to evaluate the company's outlook also. So it will give you a clear perspective and you will be more informed about it if you want to make any entry or if you want to hold it. So let's try to understand the market position. See, guys, Tata Motors is India's largest commercial vehicle manufacturer, and it's having around 38% market share in this segment. So, despite its dominance, the past few months have been very tough. The Nifty Auto Index alone, if you see, that is actually representing the broader auto market, has also fallen by 10%, and that's again reflecting the weakness across the sector. So, across the sector, there is a weakness due to lack of demand and everything. It is there. Nifty is also falling. So Nifty Auto Index also, if you see, that's again fell by around 10%. So the decline in auto sector is partly explaining Tata Motors performance, but not completely. Because if you see that the Nifty Auto Index has fallen by 10%, but Tata Motors in the last 3 months alone 25, and from the highs it's up around one by third. So but Tata Motors fall is notably higher compared to the index, right? So making it very crucial to examine company specific issues. So we can say generally there is a decline. Nifty is also falling, Nifty Auto is also falling, but here the number is slightly high. So we need to go for a specific analysis here, and that's the reason why I've taken up this discussion. Let's look at the key reason behind the decline. See, if you look at the company recently reported second quarter financial results, which were below the market expectations. So of course, if there is some market expectation and if it goes below, then what will happen? That's what actually happening, right? So the wholesale volumes dropped by 10% from 968 units to 873 units. 10% drop was there when it comes to the wholesale volume. If you look at the net profit, that's also declined by around 10%. That's again significantly affected. Again, margins were under pressure, which again, there is a sharp drop of around 232 basis points. So all these are again contributing, and several other factors, if you see, that is contributing to this challenge are supply chain challenges there, increased cost is there, right? And at the same time, forex loss is also there. Let's analyze one by one. See, one of the major supplier of high grade aluminum faced heavy flood, right? And that actually led to quality control issues, and around 6,000 vehicles were temporarily halted due to the quality checks. So this high grade aluminum, that because of heavy flood and everything, this quality check and everything is an issue. So there is a supply chain challenges there. If you look at the increased cost part, the cost of goods sold actually rose significantly by 4,000 crores, along with 16% rise in employee benefit expenses. So normally the cost is also increasing. So that is the reason. See, whenever you talk about the profit, it is revenue minus the cost. So cost side is increasing. So what will happen with the profit? Profit will reduce, and we are talking about in terms of percentage. Okay, so again, due to depreciation of the currency, Tata Motors again facing forex losses also. So that is another dimension. Now, if you look at the financial performance and the market share, if you see, despite all these challenges, Tata Motors remains strong in the market when it comes to the market share. Commercial vehicles, if you take, it's around 38.1 market share, which is very significant. Passenger vehicle also almost the same, that is around 37.2 market share. But the declining profitability is actually creating the problem, maybe because of the increasing cost. So declining profitability, the increasing cost, and macroeconomic factors also created all these issues, and these are actually affecting the stock price and also the investor sentiment. Now, we can also look at the role of external factors. If you see, Tata Motors operate in sectors that are highly sensitive to external conditions. Commercial vehicles and heavy goods vehicles are directly tied to industries like steel, cement, and construction. So these are directly connected, which are themselves cyclical in nature. So if you connect with steel or cement, and this construction business also, there is a cycle, right? So these are cyclical, so that will definitely affect these commercial vehicle also, because both are connected. So when these industries face challenge, it directly impact the demand of Tata Motors product also. So whenever there is a challenge in the steel, cement, especially the construction works, then it will definitely affect. Additionally, if you see Jaguar and Land Rover, that segment, that's a premium brand under Tata Motors, face stiff competition and capital intensive operations also, and that's again further straining the company's financials. So that is also adding to the pressure. Let's look at management outlook and the strategic move here. See, the Tata Motors management acknowledge the near-term demand challenges, but remain optimistic. Now, why near-term demand challenges? Because of inflation and people don't have much money at this point of time. That is actually an issue, and they are relying on factors like infrastructure investment. That's very much required, and festive season demand, irrespective of whatever festive season demand will be there, at least on the passenger side, and improved supply chain conditions. That's again you need to tackle. So infrastructure investment is required, improve supply chain. That's what they're focusing on, and company is also leveraging its technological innovations such as Fleet Edge. It's a product that tracks truck location and health, and revenue from this product grew around 9 times year on year, and that is reflecting the potential for a new age solution in driving future growth. Again, one interesting thing is that while promoters reduced their stake by 3.78%, domestic and foreign institutional investors actually increased their holding. So there are some good holding with respect to the institutional investors in this. That's actually a good thing, but the promoters have reduced the stakes by 3.78%. That is also a concern. Now, this actually indicate that yes, promoters may be cautious at this point of time, but institutional investors still see value in the company for the long term. Okay, so long term value is there. So that's something which you can understand and that you can take some decision upon. Again, 1/3 correction is good. Wait and watch. And if Nifty is trying to improve, there is a possibility of entry you will get. Now, if you look at Tata Motors, again, there are multiple challenges which I've discussed already. Rising cost is one thing, cyclical demand is another thing, supply chain disruptions is another thing. All these are the reasons, the dip was there. So if you can improve upon this, that is going to be very good, and Tata Motors then can come back. So long-term demand for commercial vehicle is expected to rise with infrastructure growth. And at the same time, investments in electric vehicles and sustainable technology could provide significant growth opportunities, and Tata Motors is coming in that field very drastically also. And cost optimization effort may improve the profitability in the upcoming quarters, and that's something they are already doing. But the company must address its forex losses, improve efficiency in the Jaguar Land Rover segment, and capitalize on emerging opportunities on the EV electric space. So see, will Tata Motors bounce back? The answer lies in how well the company navigates its current challenges by capitalizing on the future opportunities. We have discussed the challenges, we have discussed the management plan, we have discussed the opportunities and possibilities also. So, see, near term recovery may be very slow. We may not see the kind of move that we have seen before, but Tata Motors' strong market presence and innovation capabilities provide a solid foundation for long-term growth. Now, tell me, what's your thought on this? And do you have any plans for invest or anything? So you can comment below. That's about this session, guys, and thank you so much for attending. See you in the next video.